politicians, a lot of times if you look at where they're focused, it's like, well, who's paying the most money to their campaigns? Who's backing them? A lot of these people that are railing on crypto get a lot of dollars from the legacy system. Is it really to shut down, you think, Bitcoin and crypto, or is it more to shut down the upstarts and make sure that the legacy guys firmly have this in their possession moving forward?
So that's the question du jour. I would be careful to separate Bitcoin from crypto, as we've talked about in the past. And my first instinct is virtually no bank is going to want anything to do with anything even tangentially related to crypto, and which was a piece we put out before all of these collapses, last week, called Pandora's Precedent, where we lent some support to Nick Carter's great piece on Operation Choke Point 2.0. And as we said in that piece, we weren't surprised that the crackdown was coming, but we were a little uncomfortable with how they were going about the crackdown, in the sense that it was totally indiscriminate and made no separation between legitimate participants in the crypto universe who passed Know Your Customer anti-money laundering and the criminals who have abused the crypto system for their illicit purposes. And in Pandora's Precedent, we told the story of a very good friend of ours who got caught up in the poker roll-up, which was really kind of a predecessor to what we're seeing happen today. And in the piece, we said, when the Fed's playing for keeps here. And so my first instinct is you're going to see a stranded crypto universe where you might be able to take fiat out in foreign currencies or in illicit US dollars overseas, but no US bank and no major bank sort of tied into the Eurodollar system, this is just my prediction, is going to want to run the risk of 1% of their book being something that causes a regulatory crackdown. And I think if you read into what happened with Signature yesterday, the seizing of the bank and the firing of the management caught management totally by surprise. And I put a tweet last night that said, the Fed took the cover of Silicon Valley's bank failure to wipe out the last big rail. And then they tried to throw in a sort of a bullish tidbit as well by backstopping everybody's deposits. Now we're seeing the echoes of what I believe is the hyperventilation, the complete and utter and irresponsible hyperventilation on the part of Silicon Valley FinTwit influencers, and they know who they are and what they did. So, of course, after stirring up the mob to basically beg Uncle J-Pal for a bailout, the libertarians of Silicon Valley were exposed for who they really are. That echo is playing out today. I happen to think my base case is that this will be at least the local bottom. The Feds have decided which banks are going to survive. And historically, betting against the Fed in a crisis has been foolhardy. So that's our view. Now, what that means is something we can get into. I have some thoughts that are a little bit out there, but when you try to think past the crisis and make predictions, you sort of have to separate yourself from the headlines of the day and think deeply about what it means. And in my view, what bank? People are saying this is a bailout for the banks. It's not. It's a bailout for the depositors, because if you're the CEO of Silicon Valley or a bank or Signature, your equity's been wiped out, your reputation has been ruined, you're toxic in the industry, bondholders are being wiped out. So all the other banks looking at that have their retirement in their stock funds and their stock options aren't going to want to play around with crypto.